So the conflict in the Middle East certainly complicates the outlook for equity markets in the very short term. But I think if you step away from that conflict, I don't want to minimize the risk associated with it, but if we step aside from that for a moment and look at the long-term picture for equity markets, I think what you'll find is a pretty constructive view. Corporate profits are expected to still continue growing at a very rapid pace. If you look in the US, analyst estimates are still for around 15% earnings growth in 2026, another 15% earnings growth expected for 2027. That's a very strong backdrop for economic growth. A lot of that is being fueled by all the investment that's being made in artificial intelligence, not just the investment, but also the productivity benefits that arise from that investment. And so what we're seeing within the equity market is actually some very interesting things happening as it relates to AI. So we're seeing a lot of rotation within the markets as investors are starting to tease out the winners and losers from this theme. So it's not one of these situations where everybody is going to win. Of course, there's some companies making significant investments to the tunes of hundreds of billions of dollars, but every dollar that those companies spend is another company's revenue. So what we're seeing happening within equity markets is that the companies that are part of the AI build out, so the ones providing the hardware chips or the infrastructure that relates to data center build out or the energy used to power these data centers, those companies are benefiting tremendously in this environment. Whereas, but there are also some losers. So particularly in the software space, there's companies that are being heavily disrupted by the AI technology. So think of a business that, one of their core competencies is providing some software solution that overnight gets automated by AI. Of course, that company's revenue is at significant risk. So you're seeing a big difference in the performance between winners and losers within the equity market. I think that's a key theme that's likely to play out over the next several months and quarters. But overall, we see this as being a pretty positive story for the overall corporate profit growth backdrop, not just for the technology companies, but all the companies that will be adopters of those AI tools within their businesses. When we look at the pricing or what's priced into the market to try to tease out where the opportunities exist, particularly from an asset allocation perspective, what we find is that stock markets have gotten quite a bit more expensive, not just in the US, but also around the world. So we're seeing stock markets priced at the upper end of their historic ranges in the US, also in Canada and Japan. And so in those regions, return potential would be a little bit lower, whereas we see in other parts of the world, UK, Europe, and emerging markets in particular, we still see valuations trading at a discount relative to where our models would suggest that they should be. So in our view, we would expect over the year ahead, mid to high single-digit returns across the global stock markets. Importantly, with those higher mid-single-digit or the higher single-digit returns being available in regions outside of North America.